Hello friends, I am Inkar from Inkar IAS Academy. Today we are going to discuss about the 31st December current affairs, the topic taken from the Delhi edition. The topic is currency concern on the rupees. This topic comes under our main topic, Indian economy and issues related to the planning, mobilization of resource, and also comes under our preliminary topic, Indian economy. First of all, why it is in the news? The rupees rapid stumble pose a fresh challenge for the economy. That recently the Indian rupee exchange rate against the US dollar has breached the 85 mark. The exchange rate represents the value of one currency related to the other. So essentially, that serving as a price for one currency expressed in terms of the another currency. So first of all, what are the key factors which is responsible for the depreciation of the rupees? First of all, the strengthening. We need to strengthen of the US dollar. The US Federal Reserve's aggressive monetary tightening has promoted the capital outflow from emerging market. That is the outflow of foreign portfolio investments, that is from India, the widening trade deficit. So these are the things driven the higher crude oil imports, and also there is a higher inflation. That is a in India, where is the inflation rate was very high, and also we need to value the currency typically depreciation. That is a we need to reduce the inflation effect, but we have so much of food inflation in India. So these are the things actually responsible for the rupee depreciation, and also there's a impacts. If rupees depreciated, then there's a many impacts in that. Maybe it's in positive manner, maybe it's in negative manner. First of all, that is a negative impact, that is a higher import cost. A weaker rupee makes the import more expensive, particularly for the crude oil. Mainly we are depending on the crude oil. It further leads to the widening the trade deficit, and also it increase the cost of the foreign debt pressure, and also there is inflation pressure also increased. Then positive impact, that is it will boost the exports. The goods and service becomes more competitive in the international market due to lower price, and also in dollar terms, and also there is a higher remittance values, that NRI sending money back home benefit from higher rupee value. These are the positive impact, these are the negative impacts by the Indian rupee depreciation. So we need to measure can be taken to stabilize the rupee. Definitely we need to take measures. First of all, we need to direct dollar sales to increase the supply of USD in the market, thereby supporting the rupee value. And also there is a foreign exchange swaps, that is RBI can use buy sell swap or inject the absorbed dollar liquidity without depleting the forex reserve significantly. We can swapping the currency, and also we need to attract foreign investment. That is a policy incentives such as tax benefits can encourage the FDI and portfolio inflows in India, so which will definitely stabilize the rupee value. So these are the main measures will be taken by the government to reduce the rupee depreciation. And also there's a Reserve Bank of India making effort to reduce the use of the US dollar to stabilize the Indian rupee. One of the initiative that allowing invoicing international trade in Indian rupee instead of dollar and other major currencies is also one of the thing. The RBI also set up that Indian trade settlement mechanism to attract interest from the more countries besides allow Indian trader to use the postal accounts for setting the rupee denominated trade invoices. And also there is a internalization of Indian rupee is one of the main steps which is taken by the Indian government. It refers the process of making the Indian rupee a globally accepted currency, that is similar to the US dollar, euro, and also Japanese yen. So we can make it is a universally accepted currency. So this is the first thing. What is internalization of Indian rupees? First of all, it refers the process of making the Indian rupee a globally accepted currency. So similar to other making currency like US dollar, euro, or Japanese yen. So we need to make it as that is universally accepted currency. And also there is a process aimed to promote India's economic growth and development by increasing the use of the rupee and cross-border transaction like foreign investment and also global trade. So And also we need to require the liberalization of the India's capital account, which means allowing the flow of capital in and out country without any restriction. So that is a important thing. We need to do that. Internalization of Indian rupee is definitely increase the value of currency. So advantages of internationalization of Indian rupee. First of all, it increase the global acceptance, and also the internationalization can increase the accepted worldwide. It will accept, and also they can conduct it in the rupee, thereby reducing the demand of the foreign currency, and also they can reducing the exchange rate risk. Second thing, the reduce of the transaction cost. That is the internalization of Indian currency definitely reduce the cost of the transaction, that which incur exchange rate fees, converting rupees into foreign currency. These are the changes will be definitely reduced, and also they can boost the investment and also trade. They can internalization promote the trade and investment by making easier to the foreign business to invest in India, and also India business to invest in abroad. So these are the main criteria, and also there is enhanced of the competitiveness. We need to freely traded rupee can enhance India's competitiveness in the global market by allowing the currency to reflect the country's economic fundamentals, and also reducing the need of the Reserve Bank of India to intervene in the currency market. Finally, the diversification of the reserves is the important thing. To internalization of the rupee can diversify the India's foreign exchange reserves, so away from concentration in the US dollars, or reducing the risk of associated with holding a single currency. So this is the important way. That is a diversification of our reserves is the final and important way to increase the value of currency, Indian currency. But there is a many challenge behind this. First of all, the exchange rate volatility is the first challenge. That is, it is a primary challenge of the internalizing that rupee, as can create a risk of business and investor that can operate a multiple currency, leading uncertainty and also higher transaction cost. And also there is the integration with the global financial market requires, that is a post challenge in terms of regulatory compliance and also market infrastructure, maybe the investor protection. These are the main stress for us. And also there is a limited liquidity. The rupee is not yet widely traded currency, which means there is a limited liquidity in the global market, making it difficult to investor to buy and sell the rupee denominated assets, which can limit the attractiveness of the currency. And also there is a underdeveloped financial market, that is still relatively underdeveloped compared to other major economies, which can limit the range of product and services available to international investors. And also we have the regulatory challenges, that is require a supportive regulatory environment, and also balance the need for openness with need the financial stability and also the regulatory oversight. So these are the main challenge for us to overcome the rupees depreciation, for the rupees internalization of Indian economy. And also there is a step towards that Indian economy. First of all, there is a liberalization of the capital account. So the RBI progressively related restrictions on over capital flow of flow to and from India, thereby they facilitating greater cross-border investment. And also there is a promoting of offshore rupee markets. Indian banks to promote the participate the offshore non-deliverable market in the Indian rupee derivatives. And also there's a currency swap agreements. India signed currency swap agreement with several countries to exchange the rupee and foreign currency between the central bank and the two countries. And also they can promote the rupee dominated bonds, like the government has allowed Indian companies to issue rupee denominated bonds in international market, which has helped to increase the demand for the rupees. And also we have the bilateral trade agreements. The government has signed several agreements that the trade with the country, which facilitate a greater cross-border trade and also investment, increase the use of the rupee in the international. So there's a need to careful planning and coordination between the policy markets, policy makers, and also there is a market participation, and also there is a regulators to ensure the smooth and successful transaction, and also there is a internationalization of the Indian rupee is a huge step which definitely give the economic development for India, and also it will appreciate our Indian rupee value. So overall, the increase of the international use of Indian rupee will go a long way, and also positioning India as a more attractive destination for the foreign investment and also the trade. Thank you so much.